All right, once again, good evening, everyone. I welcome you to this week's edition of the Training and Refresher Program of the ProSyn Network. Firstly, I'd like to um, welcome all the members present on the call. I can see Okunola, I can see Faith, I can see Kechi, I can see Adeola, I can see your name properly. I can see Victor, you are all recognized. Then we want to appreciate you for another opportunity, or we want to appreciate you for your commitment to the network so far and being responsive to all what we have been doing. And we really do not take them for granted. And I believe you've been getting value being members of this network. Okay, so so that we don't take much of our time, because we have a lot of things in store for us today, and we have just 1 hour 30 minutes, and we are 7 minutes into the time already. So before we go into other things, I'd like to first of all reiterate the objective of the group, the network. I mean, number one is to have pool of professionals. Number two is to do trainings and upskill, which we are already doing. This, what we're having now, it's part of the objective, so that we can have this culture of learning, relearning, and unlearning. Of course, we can't learn everything. We can't give you everything on this program. The idea is for you to have that culture of upskill, because we're in a profession where you need to be up to date. You need to know what's going on. You need to be reminded of what you already know, and you also need to know the current trends in the industry, so that you can be able to deliver your best. And of course, when you are able to, if you are always at your best, then money will not be the issue. The issue is being at your best. So that's why we are having this program, so that we can be aware that we need to upskill beyond this program. All right, so we are going to be on this program going forward. We are going to be looking at other areas such as health. Some of us are professionals, but we're having issues with our health, because as a human, you are first a human being before you're a professional. So if you're having a problem with your health, you cannot deliver well on your job. You can't be a professional you want to be. So we're going to be also talking about health, because we are looking at a total or a consummate accountant, whereby we're looking at what are the things that should be in place for you to be a professional that you should be, and to be at your best always. So it's not just about reading accounting standards or quoting tax laws and solving financial problems. The other drivers, when we did cost accounting, some of us, we did performance management and cost accounting in this topic. I think trying to remember the topic. It has to do with cost. About cost. It's about cost, and where activity-based costing was explained, whereby we have cost drivers. So in being a professional, there are cost drivers that that are underpinning the performance or the cost. So in professional practice too, there are things that really affect how productivity a professional will be. They're also going to be looking at finance, personal finance. Now, I didn't say finance, I said personal finance is different from finance or corporate organization. Some of us are professionals, we are very good at cash flow. You can do prepare budgets, do evaluation, do other functions of the organization excellently. But when it comes to our personal finances, we struggle. And you now start wondering, you're an accountant and you are still struggling with keeping your own records of expenses and all of that. So we're going to be talking about that in this program going forward, where we talk about some of the investments. Some of us do 9 to 5 and get any regular income, and some of us are in practice, and some of us combine the two, and we are struggling with our finances. So we're going to be learning about mutual funds, where you can, in SFM, and I don't know what I can call it now. I think it's still SFM, or financial management, where you will talk about treasury bills, bonds, shares, all those things. Some of us, we don't know that the reason we had the opportunity to learn those things in school is because so that we can use it for ourselves. Some of us think that we just go to just pass it in ICANN or pass it in our degree courses. But there are things that are useful to us personally. Where to put your money, and it will grow in the next 2 weeks, 1 month, and we see it. So, like pension schemes for employees, some of us, we have pension accounts, we have retirement savings accounts. We don't even know what it is. You just receive a lot every month. You don't know that it's an investment for you. Apart from the money being in your account, the PFAs are supposed to invest that money, and you get returns at the end of the month. Some of us don't know. So all these things are what we're going to be putting up and enlightening our members, so that you can be a total accountant. And again, some of us, don't even know that, some of us are not working in a paid employment. Some of us are working on our own, have our own business. You don't know that you can even also have pension for yourself, even though you are not working in regular employment. So we're going to talk about that. Then we talk about personal insurance too. You also need to insure yourself. Some of us don't know that we need to insure ourselves. Then some of us are working in organizations. Your employers are supposed to even insure you. They call it group life insurance. You don't know. Some of us don't know all these things. So all these things are going to be enlightening all of members going forward, because these are things are really very, very important. For instance, now if you know that you have maybe 10 million naira now in your pension account, and the 10 million naira is not just there, it's just growing. Every month is giving you like 65,000 naira, for instance, every month. There's a level of peace you have inside, that okay, my future is secure no matter what. You understand? So these are the various enlightenments we are going to be putting up going forward, and that is the reason you have to always ensure you participate in this program. And if you miss it, the recordings will always be available on our YouTube channels. And if you have not subscribed to our YouTube channel, please go ahead and subscribe. And the notification button, I think there's a setting we need to activate there, so that you're able to click the notification bell, so that when the videos are uploaded, you'll be informed. Even without that, even on the group, and whenever we upload the recordings of this meeting, of this program, we'll always post it on the WhatsApp group as update. So just before we call our resource persons for today, I need to quickly bring some things to your attention, which we need to know. Earlier I talked about being a consummate, a professional accountant. And I'd like to share with you a few things you need to do to be consummate professional accountant, whether you're working with an organization, whether you are on the practice on your own, or whether you are even combining the two. It doesn't matter. The first thing there is, like I told you earlier, you are first a human being before you are any other thing. You're first a human being. And that's the way I personally evaluate people. I don't see people by the money they have or the position they hold. I see everybody as human. That's why I've learned to relate with people in all stratas of life equally, because I understand the concept of money. Many, especially in Nigeria, of course, the challenges are there, and because of the management challenges we have in the country that have left so many people impoverished. So there's a lot of lack need in the society. A lot of lack and need in the society, and a lot of people are living just below the poverty line. So it now tends to make it look like money is the problem. But money isn't the problem, but the people we have been made to see the world and see when you have money, you have everything. No, money is not everything. Money is actually, if you read the history of money, although we're going to be going forward, we're going to talk about money on this program. Money is just a a, a representation, a human representation of value. So money is just like something you use to, like a symbol of value. So why are you pursuing money? Why not just pursue the value? So if you pursue the value, you have the money. But if you pursue the money, you miss the value. So although we have to talk about that later on, but the society now is, if you see somebody now, on the street and the person seems to have money, everybody, we just think that he's already, we just credit many things to the account of that person. He's a wise man, he's a prudent man, he's a diligent man, he's everything because he has money. Of course, money, if you are those things, you have money, but doesn't translate automatically. So to be a consummate professional accountant, you need to evaluate yourself and understand yourself and your purpose. That one, nobody can do that one for you. You have to evaluate yourself. And evaluating yourself is something that, as an adult, you already know what you want for your life. That, when we were growing up, our parents told us, okay, you must be this, you must be that. But at a point, you have to sit down and say, okay, what do I want to do? What do I want to be? So you have to choose something for yourself. Then in choosing something for yourself, you already carved out a purpose for yourself. So that purpose is very important because the purpose is now going to let you know the kind of environment you will be. Because you have a purpose, you have something like, this is myself, this is what I want to do. So because you understand that, you have to carve an environment for yourself. It will determine where you live. There are some places, if you stay there, you know that staying there is going to affect your purpose. Nobody needs to tell you. That's why some people, they just leave an environment and people start wondering, why did he leave? The person must have evaluated, if I stay here, I will be derailed. No matter where the place is, whether it's your parents' house, whether it's any place you find yourself that is not aligning with your purpose, the thing you'll be itching to leave that place. But when you get to where your purpose will be nourished, will be served, then you want to pitch yourself there. But if you don't even have a direction or a purpose, that means you can stay anywhere. And of course, anybody who doesn't have a purpose or direction will just be, I don't know what to call it. We just be there, not moving forward, not going backward, just stagnant. And in fact, if you're not moving forward, you're going back. There's no, because time passes, things as time pass, then some people are left behind. So that's that with knowing your purpose, informing your environment and where you stay, because where you stay determines some things about you. It is important because there are some things you see, you smell, you hear every day. You see some things, you smell some things, and you hear some things every day, and it affects you. And it pushes you towards being a better person or a worse person, or worse. If you're in a toxic environment, there are no two ways about it. You will always be toxic. Whether you agree with it or not, it will pop up. Even on your job, you will be toxic because you cannot give what you don't have. If you are always seeing people who are toxic every day, some people will go to some street, even to greet you is insults. Your greeting, the way they are even playing with you is insults. I believe some of us understand this thing. Everything is insult, unpleasant words. Even when you are joking, it's unpleasant words. So such an environment, you have to look for a way to get out. And I understand it's not easy to leave some environment, but what you need to do is to have exit plan, clear exit plan to leave such environment, because there's no way your environment, have a way of pushing some things into your consciousness, and before long, you just become that thing you don't want to be. So if you find yourself in the wrong environment, please try to get out of the place or have an exit plan that you are pursuing intentionally. Then the next one is, your evaluation, your associations, your friends. How to choose your friends How to know the friends to choose is through words. You know, people are not different from what they say. People are not different from. If you want to know who people are, just hear them talk. Some people within 10 minutes, you already know the kind of person they are. And you can tell, oh, this person, no. It's not, the reason is not because he's, you know, you have some of us who are young. We have very wonderful criteria of choosing friends. He's a lovely, he's a beautiful girl. He has, you know, he has all the physical features and all those things. Well, it's not a problem. It's not a problem. Those are physical compliments, but life is more serious than that. If you grow up, when you grow up, you understand that life is more serious than, okay, she's fine, she's tall, he has six pack, he has this, he has that. No, or he's wearing Brazilian hair. Those are compliments. Those are like, if you're into building, you know that there's something called cladding. You know, there's a cladding is just for ornamental purpose. It's not the real building. They just put it in front to make it more beautiful. So you have to have that thing before cladding. And some people make a decision on the basis of cladding because they don't have purpose, or they are not committed to their purpose and direction. So they miss it and they get into the wrong relationship, you know, and they are derailed. And the cost of coming back to the track, although, like I used to say, see, if you find yourself on the wrong track, don't say it's too late. In as much as you are alive, it's not too late. Turn back. Even if you have been on that journey for 25 years, once you find out you're on the wrong journey, please take a detour and go to the right direction. Or you have lost some time, no doubt about that. Nobody's contesting that, but you have to make that change if you want to enjoy your life. So you have to choose your friends, and the way to choose is to hear people talk. And some people also do talking. They are very good talkers, but you can't match their actions with their words. Such people also have to, you know, find a way to avoid them. So people who match their words with actions and they are true, those are your friends, and they have to be in line with your purpose. Then the next one is, you know, in associations. There are some of us we attend. Some of us we have the opportunity to attend churches. So some of us are raised in churches. Like me, I've been in my church. I've been in my current church for 20 years, and my current church is such that I'm not. Not as my parents. In fact, I have been into two churches. This is my third church since my life. I'm almost 40, so there were some churches, two churches. I've attended three churches. So the first two churches were the churches my parents, you know, I had to attend the churches because my parents attended the churches. But as I became an adult, I chose a church for myself, and I've been there ever since. And I've been there, and there's no plan to live there. But you can't always be. Anybody cannot always be like me. You can be in a church, and the church is not, you know, talking. They are not doing things that are aligning with your purpose. Please, you have to leave that church. And if it's in a branch, if it's a church, if the church is okay, if it's a branch that they are not doing anything, they are not, leave that branch, go to another one. And, you know, just the reason is just for you to be moving around from one place to another. It's just to see, you want to protect something, because as a human being, there's a you. Like my pastor used to say something, there's a you in you. You understand? There's a you. It is not this physical person. There's something inside that is the you. So you're trying to protect that you. So in trying to protect that you, so that you can always give your best. There are some decisions nobody will tell you. You just know that, see, I cannot be here. I cannot be with this person. I can't work in this place. Not because you are being proud. Well, you just know yourself that, see, if I work in it cannot align with my person. So I have to just excuse you. So, and some of us are stuck in institutions like that you are not able to live. And it looks like, if you leave this way, what next? You know, we are not sure of the future. Yeah, don't be afraid. What you just do there, if you are in such position, is to have an exit plan. You don't need to leave immediately, because leaving immediately can even spell more doom for you in the short time. Even though in the long term you gain, but in the short time it will spell doom for you. But what you need to have is exit plan. You know? Just look for a way to plan your exit out of things that don't serve your purpose. So if you're in some churches, and they are always fighting the devil. Of course, it's good to fight the devil. You know, devil, yeah, but you know, learn to win your fight. You know, if you recognize there's a problem, ensure you win that fight. And you know, some people they just like continuously to be fighting devil, never stopping. And it's such if you continue to fight devil, When will you have time for upskill? When will you have time to do things, do business, to do anything that will profit you, profit your career and bring money to you and make you live a good life, not just fighting every time in battle. So if you're in such a place, you need to leave. Of course, if you have an issue, you can always go back there. But going forward, you cannot continue to engage in such activity and have a consummate life and be productive. In fact, I remember one time there was one, and some of us we watch comedy a lot. We watch all these comedy shows a lot. Of course, I understand Nigeria is stressful, the prices and all of that, inflation and all of that. But in order to relieve ourselves of this stress, we try to do things that what things that will make us laugh and make us forget all these things. Yes, I understand, but we have to limit the time we spend on those things, because there's a way. He has a way of knocking into our person, and is what you put in, you will give. That's why you see some accountants in some groups, you just are wondering, what they post, the kind of things they post on professional groups, just wondering, where are we? Are we at are we in the motor park, or are we? You start wondering, are we not accountants here? See what you are posting like you are some layman. It's not because they don't know what to post, but because we live by what is in our mind. They know what they post, but is what the comedy and all those things, all those social stuff, it's already what is on the top of their mind. And so that is what is pushing out. It's pushing out. And in being professional, even some people, when they have business deals, all these things find a way of pushing out too. And they're just wondering, after doing all the presentation and doing the proposals, and the client says, no. Because he's looking beyond what you are saying. He's looking beyond what you are presented to him or her. You're also looking at your attitude, your kind of person, like, who is this person? That's where some clients, analyze people. So you have to look for a way to limit those things. Because, like I've said earlier, you're trying to be a consummate person, a consummate professional. And in being that, you are first you have to be a consummate person, as in like personality, before you are a consummate professional. So these are things you have to do. You have to make it a kind of a habit, a culture, a personal culture, so that if they say come and present something, you don't have to go and prepare on how to. You are ready part time. You don't need to be doing one special preparation to do something, to be professional. Maybe, okay, there's a call, come and help us do this thing as a professional. You are not thinking, no, give me time. I need to do that. No. You have to be ready part time, because if you are not ready, if there's a demand on you, don't determine when there will be a demand on you. So if a demand on you is placed and you're not available, you miss the opportunity. So we have to do that so that we are not, just in the crowd. We want to be distinct. And because we are in a group that we demand of ourselves the best, as you are trying to be your best. I'm also trying to be my best, so that when I need you, you are giving me your best. When you need me, I'm giving you your best. Then collectively, when the society needs us, in terms of your engagement, we are giving our very best. And there's no way you give your best that your services will not be in demand. It's not possible. Your services will always be in demand, because people want the best. Even people who cannot be they don't know how to be the best, they will pay a fortune to get the best, because they know they are getting value for their money. So that's why it's very difficult for you, if you're at your best, to lack money, because you have value. You cannot lack money if you have value. So if you're at your best, you have value, you will have money. You cannot lack money. So that's that with association. Then also avoid distractions. In social media, some of us, we are always on our phones, and it has advantages and disadvantages. Social media has a lot of distraction, and also has a lot of, in fact, has more benefits than distraction, depending on how you see it. And in being on social media, you have to intentionally follow people that align with your purpose. Whether it's Facebook, Insta, all of them, you have a way of choosing. It's not that people who complain that they are distracted by social media is because they are the ones that make they invited the distraction to themselves, because you have Instagram account, you can determine what shows up on your timeline. You have the power. The people who design Instagram, they know they even TikTok, as distracting as it is, you can still regulate some things you don't want to see. So on LinkedIn, when I'm choosing following people, I choose. And when people show up, some things show up on my timeline that I don't like, immediately I do not hesitate to block. That's why even those people who created social media, they put all these things there: unfollow, block, lock. They put all these things there because of preferences. So you have preferences. So use them. If you come on your LinkedIn and you are seeing, even on LinkedIn that's supposed to be professional, sometimes you see some things that are very distracting and unnecessary. You can block it, and it will show up on your timeline. On Facebook, block it and follow, so that when you open your Facebook, they are inspiring things. Open your Twitter, inspiring. Open everywhere, inspiring. So you are already protected and logged in for to be a consummate person. I have 8 minutes before I call our resource person. So you have to use those buttons. They are not for fashion. They are for controlling and regulating your person, your inner person, so that you'll be able to be a consummate person. Then a consummate person becomes a consummate accountant, and a consummate accountant will not lack anything. And even beyond money, the fact that you are good, you are consummate, gives you some peace of mind. Like, take me anywhere, I can create value, I can give value. With that one alone, you are good. Then when you have some association you get to, some of us, we have clients and they have some social gatherings and some things that they call us to come and know as invitees. And because you have a relationship with them, you cannot say no, you have to appear there. So, and some of these places are places that you don't really like, or they are not really aligned with your purpose. What you do in such a place, when you are going to some of us work in construction region or area, before you enter into the construction area, the HSE guys will come and start giving you some things. They call them PPE. That's personal protective equipment. You wear your helmet, you wear your safety boots, you wear your reflective jacket, just to protect you. The same way, when you are going to a gathering like that, where there are many people, there are places where you know that it's not where you are comfortable going. You have to wear your mental PPE. You have to protect your mind, so that some things don't get into you, because like I said earlier, is what you have inside you're going to give. And there's no way, we are human, there's no way you can only pretend for a short time. When you're under pressure, the real you will come out. And when that real you come out, and there's no way you can hide it. Pressure reveals a lot of things about you. And we can't tell when the pressure will come. So you have to put on your PPE so that some things don't get to you. And for eventually they get into you, you should also have a filter. Like, you have to go and read some things. You have to go and flush those things out. When you get to a place that you're supposed to be there, just being there to honor some people, you have to get some filters and filter those things away. And why are you doing this? Because you are being intentional about your person, about the real you that is in you. So it's very important to do that. Then lastly, you got to avoid distractions. You have to you have to avoid exhaustion. Some of us are like, I'm also guilty of this. Sometimes I fall asleep a lot because I'm a workaholic. Fall asleep, like I have to work until I have to fall asleep. I have to have some tiredness headache before I go to bed. It's a bad habit. Anybody who does that, you don't have to always fall asleep. You have to go to sleep, and you don't have to now be so exhausted before you rest. Rest in between. Rest as you walk, you rest in between, so that by the time, because you can't determine when that break, that opportunity is coming. But if you are not ready, if you're not ready at that time, okay, what if the opportunity comes? Well, I can see reactions here. What if the opportunity comes, and at that time you are not ready to take advantage of the opportunity on the excuse of exhaustion? It will pass. So you have to incorporate rest into your schedules. Some I have opportunity to be with some CEOs. Some of them have beds in their office. Of course, now employees can't have bed because we all know we abuse it. Employees will abuse it. But the CEOs that have beds in their inner office, they know they know the importance of resting because they do a lot of things. And sometimes it's not just putting your head on the desk that will make you that will get you to refresh. Sometimes you need to just have a proper nap for 20 minutes or 30 minutes to get refreshed. So as employees, you can't have that luxury because of abuse, because many people will abuse it. So it's only for top level management staff that can have that opportunity. But however it is, ensure you have a way of resting in between, and don't pile up. Even personally, don't pile up things. Some people, they just pile up clothes, pile up this, no. You have to incorporate a system around yourself where you undo things, but let things flow, not something piling up, because it will make you look like you are busy. You make you look like you are busy, but you can have time to go on Facebook and start reading some other things. Just be sincere with yourself. Don't let him pile up. Everything you're doing, the details of what you do personally. Don't let them pile up. As you have time, you don't have to wait till things pile up. As you just 3 piling, then you quickly attend to 2, remaining 1, they attend to this, and things are balanced. Not that you now pile up, then you start doing firefighting approach, like I call it. So I hope you've been able to get some value from what I've said so far. So now, in the next 7 minutes, we are going to be calling up our resource person, which is we all know her, but it's not time yet. So I just want to give opportunity to just one person to talk about the benefits he or she has enjoyed being a member of this network, just in 2 minutes. So please just put up your hand if you would like to speak. Okay, Mr. Gani Tayo Larewaju is a very active member in fact, since he joined the network, he has always been on this training live. As kudos to you. So you have the floor, Mr. Gani.
Okay, good evening. I'm sorry, I'm on traffic.
No problem.
Really appreciate you, Mr. Caleb. Thank you so much for this opportunity. And also, what you gave us this afternoon, it's already added a lot of things, even more than enough. So, really appreciate you. Personally, as for myself, I've just tried to be able to. I've been thinking of how I can be among the professionals. So far, that is what I plan to be doing. Like, I plan to practice this. Actually, if you want to practice, as you said, so you need to stay updated, and also you need to be learning, learning. So since when I've joined, I've I've gained a lot. Even though I think previous day when they were talking about the issue of tax, I even just tried to gain because part of what we knew in class was that the medical items, as I've mentioned that day, was to be an tax exempt item. But that day, I've just tried to be known that it has already been classified as zero rated package. So this is part of what I can talk about in class generally. And also, during the last section, I think the previous one before the last one that we also had, we try to gain a lot too, how to relate with customers, with our clients generally. And like there are lots. So I really appreciate, and I'm so happy for joining this particular group. It has been a lot. Thank you so much, Mr. Kilevan. Also, all the a founder of Frozen Network. So I really appreciate it. That's what I can.
All right, thank you so much for those words. Thank you for the inspiring and motivating words. We still have like 2 minutes to go. We'd like to just one more person. one more person to talk about being in the Protein network and the benefits we've had so far. And by the way, during the week we launched an e-resource platform where members to access for materials, publication, laws, template, resourceful items, resourceful materials that will help us be better professional. And we inaugurated the research and development team. The research and development team is made up of course, first class and distinction members, those who finish with a first class degree in the university and those who finish with distinction in the polytechnic. They are the ones that are members of this research and development. So their task is to populate or enrich the e-resource center with various templates, and they've been commissioned to do that, and they are at it. Every week you will always see something new in the resource center, and I think it's a good one. And because they are in different fields and the different areas of the accounting sector, so we have a lot of things coming from that direction. So as they update, we'll put it on the platform so everybody will see it and know that there are new things in the folder. So I'd like to call on somebody else. I don't want to mention the name, but just one more person before we bring in our resource person. Okay. In the absence of comments, so our resource person is on the call. So and she's going to be coming up by 5:45. So before she comes up, I'd like to just tell you a little bit about her. Oh, there's a hand up. Oh, sorry. I'm going to call you. I'm going to call you before we end the program, because it's time to call our resource person, because she's a busy person. She works with schedule, so we don't want to take time, because after this call she might just have another appointment to catch up with. So we all know her, but just in case you don't know her name is Aderonke Ajibola. She's a fellow of the Institute of Chartered Accountants of Nigeria, FCA. She's an associate of the Chartered Institute of Taxation of Nigeria, ACTI, and an associate member of the Chartered Institute of Management Accountants, CIMA. The managing partner, Ababa Consulting. Some of us who are on LinkedIn, we know her. And of course, she's also selected as top content creators, top 20 content creators in the Presidential Fiscal Policy and Tax Reform Committee. So she was number 10 on that list. So there was a time the Presidential Fiscal and Tax Reform Committee, led by Mr. Taiwo Oyedele, wanted to train some finance, those who make content in finance. And they put up nominations, and over 8,000 nominations. Then they emerged 20, and Aderonke Ajibola was number 10 on that list of the top 20 finance content creators in Nigeria. And that attests to the fact that she's a very valuable person, and we are so privileged to have her in our midst. So every member, join me to welcome Madam Aderonke Ajibola, FCA, ACTI, CIMA, and Managing Partner, Ababa Consulting. So you have the floor, ma'am.
Good evening, everybody. Good evening, professional colleagues. Good evening, everyone. Happy weekend to us. Good evening. I was when I received the message during the week to take this week section. I was excited and I was actually interested because this topic that we want to talk about is something that I know affects us as tax professionals and as finance professionals going forward. And so today I'm here just here to talk about the Nigerian Tax Act 2025, the update that has happened and how it will affect our work as finance professionals going forward. We all know that tax compliance is a function, or the responsibility of tax compliance sits with the finance team, head of finance or the finance representative, and is to be able to perform our duties well and responsibly. It's only right that, sorry, there's an echo. Okay. It's only right that we know what is expected of us. So, what makes this conversation different from any other possible session you might have seen online or something related to tax, as Caleb rightly said, is one, the fact that I was part of those instructors appointed by the federal government. And then two is also the fact that, I have this I'd say ability to be able to communicate complex finance matters in simple terms. Um I gave it so what you'll be hearing from me is not just some high level conversations on how it is done, it's how you can interpret it to your day to day work. So facts that we should be, I think we all know, but then let's just give ourselves a refresher course. First, it's not just before we go into the individual tax changes, we need to talk about the legislative changes that has happened because, as we all know, the new Nigerian Tax Act became effective 1st January 2026. So we have NTA 2025, then we have in Nigerian Tax Administration 2025. Then we have NRSEA 2025 and Joint Revenue Board JRBEA 2025. So the Nigerian Tax Act 2025 covers majorly the transactional taxes, as I like to call them, the CIT, PIT, VAT, capital gains tax, stamp duties, and incentives, exemptions, and the likes. While the NTAE is talking about how you administer the Nigerian Tax Act. So the NTA is basically Nigerian Tax Act Administration, where you're talking about the filings expected of you, the audits process, appeals process, and they made mention of the digital platforms for executing or handling the NTA. Then you have the law that establishes the Nigerian Revenue Service, which is replacing the FIRS. Then we now have the Joint Revenue Tax Board, which is also coordinating federal and state authorities, especially for pays and how this will be allocated within the federal and states. Now, so FIRS, as we all know, no longer exists. It has been replaced by the Nigerian Revenue Service. And so all your filings, all your correspondence and everything must go to the NRS. So if you're now doing your day-to-day work, even and the NRS takes this so seriously that even before January 1st, they had gone ahead to change all their buildings and even down to their letterheads, right? Now, I'll now take this in 4 points. So my first point is now the small company exemption. So the first major change that will affect a large number of companies, right? And is the definition of what a small company is. And under the new NTA, a company is classified as small if two things occur, and I like to call those things two-factor authentication. One, classified by revenue, and two, classified by fixed assets. So we know that if the annual turnover does not exceed 100 million naira and its total fixed asset does not exceed 250 million naira, both conditions must be satisfied simultaneously. So it's not a case of an either or any longer. It's compulsory that all those two conditions must exist before a company can be classified as a small company. Now, if your company qualifies as small, you pay 0% CIT, zero percent. So, and then you don't get to pay development levy. And this is a significant relief, particularly for SMEs. And we all know that if we can interpret this basically, we can say that the objective behind this goal, or the objective behind this policy or definition of what an SME is, a small business rather, is to be able to give more room to expand the tax bracket and to bring in more businesses into the tax tax net. So because right now Nigerian businesses, or even prior to this law, right, there are a lot of informal sector businesses, mom and pop shops, um growing businesses that are not necessarily just evading tax, but choosing not to because they feel that if they do go for registration, either as an enterprise or as a business name or as a limited liability company, they'll be exposed to some form of tax exposures. So, in a bid to avoid those tax exposures, they just choose to stay out of the tax net. But guess what? Even now with the CAC, I was still telling someone earlier today that once you register with the CAC, the CAC has integrated with NRS. And once a business is registered, automatically you get um you get what we call a tax ID assigned to you, right? Then, sorry, I'm trying to see if I can download my PowerPoint slides and present on my screen because I'm currently on my phone. So if you see me leave this meeting anytime soon, it's because I switched devices to try to connect with my laptop. Okay. Then next point for me is now the minimum tax threshold as well. So the minimum tax threshold was not abolished. So a lot of people are saying, "Oh, there's nothing like minimum tax any longer." What we now have is that there is a reform on what is minimum tax. So the old basis of 0.5 of gross revenue and all that has been replaced. So all loss making entities are now exempt, but the concept of minimum tax still exists for large companies. So what I is saying is that the correct thing is going forward that there is still minimum tax, but it has just been a redefinition of what qualifies as minimum tax. So saying people saying that no more minimum tax is actually a wrong misconception. So we changed the basis, or what has changed in the law now is the basis for minimum tax. Under the old regime, what we had was 0.5 of gross revenue as minimum tax, even if you made a loss. But what we now have is that the minimum tax is 15% of net income and it only applies to large companies. So if you're an SME and that's a small and medium scale enterprise, remember that you're already VAT, and if your turnover is below 100 and your total assets is also below 250 as well, all right, should in case you an entity that would need to make the minimum tax payments is just limited to 15% of your next income for large companies. For small companies, minimum tax does not apply. So if you're a struggling business and you know you're in a position of making loss, you're fully exempt from minimum tax. So the challenge now lies with the profitable business. And as we said, remember that even if you're profitable, but you're still an SME with an turnover below 100, total assets below 250, you are exempt from minimum tax. You're exempt from any form of, transactional taxes. So how does that affect you? So that's why I see a lot of debates going on online to say which should we do? Should we do minimum? Should we do SME? I'm sorry, should we do business name or limited liability company? And it's because people are trying to take advantage of this minimum tax exposure to a large extent. Then we now have a framework, OECD pillar framework. So what does it just mean is that Nigeria has joined in the global effort to ensure that large multi companies cannot use tax planning to pay less than 15% effective tax rates anywhere in the world. So we know a lot of all these tax havens that exist, right? So how businesses make certain strategic decisions trying to get some tax savings and tax havens. So what now has now happened is Nigeria has now domesticated what we know as the OECD Pillar 2 framework. So, if you are a large multinational company, you cannot use tax planning strategies to pay less than 15% effective tax rate anywhere in the world. And we know all this when you're consolidating your accounts and all, your IRR will be reported at your effective tax rate will be reported at the group level, right? So, if that effective tax rate at the group level is below 15%, it's wrong globally. So the OECD seeks to correct those large multinationals that are taking advantage of tax havens and making some tax savings for themselves. So the effective tax rate for any such company falls below 15%. The company will have to top up to bring its total effective tax rate to 15%. And the two rules applies to two categories of company. First, multinational enterprise groups with consolidated global revenue of 750 million euros and above, and second, Nigerian companies with annual turnover of 50 billion and above. So, as I mentioned, most of these entities that I just called you, I mean, if you, as a group globally, if you can make 750 euros and above, and then above 50 billion naira in Nigeria, the question now becomes why are you, seeking tax savings or tax havens? And what the objective of tax is basically put some monies in the coffers of the government to be able to run the country successfully. And as we all know, there's a popular colloquial language where we say there are two things that are certain in this life, which are debt and taxes. So, in a case where a business is trying to hide its tax under um, some proper tax planning or something, they're saying no. If you're making a global revenue of 750 million euros or above, and then if your annual revenue in a business based in Nigeria is above 50 billion naira, if they do your effective tax rates and they see that an effective tax rate here, we're talking about CIT, if you see that it falls below 15%, you will need to pay for that shortfall. So how is the effective tax rate computed? So it's not just technical. I'll keep it at high level for today because there's a lot of technical legalities involved here. So you just adjust, you take the adjusted taxes page, you divide it by the qualifying net income, which is the global income. Then you remove any exempted items like dividends and international shipping income. And if you're reduced by 5% for tangible assets and 5% for payroll cost, that will give you your effective tax rate, right? So when you do all this computation, if it falls below 15%, you have to pay that difference to the NRS, no exemptions. Then development level at 4%. Every every large company, I like to reiterate what is defined as a large company. A large company is someone whose revenue is in excess of 250, is in excess of 100 million, and total assets is in excess of 250 million. So that's a large company. If you're making above 100 million in revenue and you're making um you have total assets above 250 million, you now pay developmental fee of 4% on your accessible profits, which is separate from CIT. So it's not really tax, it's just the developmental levy, but the practical effect is the same. It's reducing your tax, right? So the level reduces the fragmented contributions that used to go to. So before we used to have things like Naseni, TED Fund, NITA, police levy, all that. So this kind of streamlines all those various contributions. So now you're now consolidated into one where you just have a development levy. And it goes, so there's an allocation of that development levy that goes towards technology, education, and national development priorities. The important thing of note is not just for tax computation. The levy is not deductible in arriving at your tax profit. So you pay it on top of your CIT. So it's not an allowable expense. So that effectively means that if you're a large company, your tax rate effectively is 30% plus that 4% of development levy. So 30% for CIT, which invariably means 34%. So going forward, we'll know how this would impact our financial computations and review. Right. Some companies have historically used charitable donations as a tool to try to reduce income. They were using donations as an allowable tax deduction. But under NT 2025, are deducted donations are deducted only up to 10% of your accessible profit before donation is applied. So any donation above 10% of your accessible profit is added back to your taxable income. And we've seen this thing happen a lot where, businesses are trying to do some sort of tax planning or tax haven. They will now set up some foundation. We all know it. A lot of all the rich folks in Nigeria have some form of foundation where they are using as, tax savings and a reduction in their accessible profit, right? But now, per NT 2025, your donation is the allowable portion of your donation is capped at 10% of your accessible profit before donation was applied. So, if your accessible profit is 50 million naira, for instance, and the maximum deductible donation is 50 million, which is 10% of your accessible profit. So, even if you did a donation of 80 million, if you did a donation of 90 million, whatever, anything above 10% of your accessible profit will be added back and you have to pay tax on it. So this is the government's way of saying, well, we support your CSR activities. We will not allow you to use it as a blanket tax avoidance mechanism, right? So for companies investing in innovation, it's a positive provision. The next point is now on R&D. So R&D is not limited to 5% of your turnover. So for companies engaged in qualifying R&D activities, research and development activities, the new act provides a generous incentive. You can deduct up to 5% of your annual turnover. So annual turnover is just revenue even before your cost of sales or all that, right? So you can deduct 5% of your annual turnover as an R&D allowance before computing your tax. So it's a pre-profit deduction, which makes it significantly more valuable than a post-profit credit. It directly reduces your allowable tax base. And how does it benefit a business that is into R&D? One, technology companies. We know a lot of tech companies nowadays are doing a lot of R&D as well. Pharmaceutical businesses, businesses will also benefit from this. Manufacturing entities will also benefit from this. So anyone essentially trying to improve the overall welfare and well-being of the Nigerian of the citizens of Nigeria will benefit from this. So technology companies, I'm talking people like your Paystack, your technology driven businesses, pharmaceutical firms, which are essential services for healthcare, and agri businesses which are providing food for the nation. So it's just a way of incentivizing and encouraging people to say, you know, this your R&D, you can use that R&D to um you are investing in the country. You are trying to improve the welfare of the citizens of the country, and because of that, we appreciate you. We see you. We're allowing you to apply 5% of your turnover as a reliable deduction. So we can. This incentive is just to incentivize that area and encourage more private sector participation in growth of the country. Next is now your pioneer status and economic development certificate. So the pioneer status has been reformed. Previously, it was broadly available across a wide list of industries, but under the NTE 2025, is now reserved for government designated priority sectors. So these sectors include your energy transition and renewables, manufacturing and agro processing, solid minerals and mining, digital infrastructure, and healthcare. So any company that is operating in these sectors that I've previously mentioned, they are deemed that they must meet a defined investment threshold and demonstrate that they have plans for genuine job creation. Then there's now incentive that they obviously apply to the pioneer status office, and so you're now going to get it. Right. And then companies that qualify receive what is called an economic development certificate, the EDC, which grants them up to 5 years income tax holiday. So that means they will not pay CIT for 5 years. Now the economic development certificate can vary in period between 3 years to 5 years, obviously with the option of renewal, right? So this application is renewable for a further period. But that is the key condition. The company must maintain 100% reinvestment of qualifying profits during the pioneer period. So you cannot distribute profit and claim your renewal. So meaning that you cannot be doing dividend declaration or or bonus payouts to your investors, and now say, oh, I want to get pioneer tax profit because or pioneer status because government's rationalizing. And one of the things I said you also be getting this is where I'll be interpreting it in layman terms. So the government was thinking, the government is trying to say that if you can afford to pay yourself dividends and bonuses, then you should also be able to pay the CIT to the government. That you cannot, in good light, now apply for CIT even after CIT events, and then use that as a incentive to further pay yourselves dividend or bonuses. So now I want to spend more time on the significant change between for corporate taxpayers, which is now talking about the capital gains. So under the old system, we had 10% CGT, which no longer applies to companies. Capital gains are now integrated into the CIT computation at the full 30% corporate rate. So this is one of the highest changes that we had between for any companies that is holding shares or properties or an intangible asset. So we cannot state I cannot overstate how significant this change is because under the old capital gains tax, companies had a separate 10% on chargeable gains. So, but that is gone. Under the NTA 2025, capital gains is now included into your CIT computation. So the net capital gain after deducting allowable capital losses is added to your assessable profits and taxed at the full 30% corporate rate. So there is now an effective tax rate on capital gains on companies from 10% to 30%. So what is now charged? What is now a chargeable amount on your capital gains? In addition to the usual assets, shares, real estate investments, goodwill, patent rights, digital and virtual assets are now explicitly chargeable for the first time. So we're talking things like your cryptocurrencies, your money markets, and all. Your virtual money, your virtual wallet, your NFTs, and your digital tokens, they are not part of the things that are now your any gains on all these investments are now part of your chargeable profit. And what this I see is an improvement on the interpretation of the law and the law trying to catch up with the society that we live in now. They're trying to catch up with the times to say in this day and age, we know that some businesses invest in stock markets, some businesses invest in the crypto market, some businesses invest in even virtual golds, etc. So let the law catch up with the society as it is today. Now there are exemptions, as we know, and the most important one for companies are companies dealing in shares. That's if the disposal proceeds are below 150 million naira and the chargeable gain is 10 million or less within any 12-month period, then that game is exempted. But if the proceeds are invested, also if the proceeds are invested in shares of Nigerian companies within that same year, no capital gain tax applies. And this is a very important technical point on losses. So capital losses can only offset capital gains. You cannot use a capital loss to reduce your ordinary business income. So excess capital losses are carried forward into future years. So related to this, we will talk about capital allowance and what has been significantly restructured. Next point is on capital allowance, the new rates and the new rules. So capital allowance has been fundamentally restructured under the new act. If your finance team is still preparing tax computations the old way, there will be a need to update your approach to it. So number one, the key changes is from reducing balance to a straight line balance. So you now have an equal annual deductions over the asset's useful life. So it's now predictable, easy, and simple to compute over the useful life of the assets, right? Then the initial allowance is not abolished, no more accelerated first year deduction. The next point, which is point three, is there is a restriction on claims are now removed. So previously, capital allowance could not create or deepen a loss or in certain circumstances. That restriction is gone. You can now claim your full entitlement regardless of your profit position. Point number four is unclaimed allowances carried forward indefinitely. There's now no expiry on unused capital allowances, and the three rates now are now in force. We now have buildings and structures. There's already a pre-planned and predefined rate of 10% per annum on capital allowance deduction, then which is basically saying 10 years, right? 100 divided by 10 will give you 10 years, 10%. General plant and machinery and motor vehicles is now 20% per annum, which is also 5 years. And then equipment and heavy industrial plants is 25% per annum capital allowance rate, which is also 4 years. Then one final technical point on capital allowance, that there is a 1% retention rule. 1% of the original cost of an asset is never fully written off in the tax computation. It stays in the books as a nominal value for the life of the asset. This is an asset tracking and compliance purpose, right? So our next point now is on to foreign source income and unilateral tax relief. If your company is a Nigerian resident, and we all know what the definition of Nigerian resident is. Nigerian resident is with significant economic interest in Nigeria and has been in the Nigerian market for um in more than 180 above of 183 days, right? Then you now become a resident in Nigeria. So if your company is a Nigerian resident but earns income from foreign sources, that income is subject to Nigerian Tax Act. So the question is, how do you avoid being taxed twice, once abroad and once here? The new act provides for what we call a unilateral tax relief, which is this is how it works. If your foreign country already deducts a UHT on income paid by a Nigerian company, Nigeria will have to be giving credit, right? Will give you credit for that foreign tax. Then the principle is such that you should pay the higher of the two tax rates, not both. So practically, for instance, if you have a business registered in Nigeria, another business registered here in America, no, registered in America, another business registered here in Nigeria, right? The foreign tax rate is whichever is higher is what the business will pay. However, what has been paid in Nigeria, or I'm going to assume that Nigerian rate is obviously lower than that of the American rate, will count as a tax credit, which will now be written off against your American entity. So it's not just you don't get a full exemption to say, oh, since you're already going to go pay the higher tax rate in America, no need to pay taxes here in Nigeria. That's wrong. You'll still pay taxes here in Nigeria, but then the differential is what you now go and remit to your American entity. I'm going to assume that the Nigerian government and whatever country your business is registering in, they have is what we call a double treaty relief and taxation mechanism for collection and resolutions of all these matters at the back end and at the high level of governance. Next point is now on export sales and export income. So we all know, we've seen it, a lot of all these e-trading platforms that now exist, Trade 136, AliExpress, and the likes, Temu, etc. So if you're earning income from exporting of your goods, so I bring that up to say the other day I was on Temu and I saw that there was an agbada up for sale on Temu. So I mean, Nigerian vendors are now exporting their products, right? So if you're exporting anything, that income is exempt from CIT. So this is a deliberate attempt by the government to incentivize foreign exchange earnings and make Nigerian exporters more competitive globally. Because as we know, the Nigerian economy is majorly driven by dollar. Any impacts on foreign reserves will either be a positive or negative impact on the economy as a whole. So they are now saying that, oh, if I see you, business owner, even if you're a large company, but you're exporting, so you're taking Nigeria outside, right? Will incentivize you and will give you a blanket CIT exemption. But what that has not done is that even though you're still blanket CIT exempted, compliance is still required. You must still file your annual tax returns, even though no tax is due on export income. Failure to file is still a non-compliance. And I get some minutes before this training started, I got a notification that LIRS has even extended the deadline up till 21st of April for state filing. And what they are just trying to do is give people ample time to comply with the law, to follow the letters of the law, so that you don't want any stories to say, oh yeah, but because there's a tribunal process involved in this, right? So they don't want people to say, oh, but you said I'm exempt, right? That I'm exempt from CIT. I'm exporting any income from my exporting business is CIT exempt. Yes, I've exempted you from CIT, but not exempt you from filing. It's a different thing. So you must still file, right? So and that is also for people who are even earning. That's for individual nouns. Individuals earning below the minimum wage. We know they're all exempt from CIT, right? I mean, pay. even if you are below the minimum wage, you are still required to file. All right, so you must file your returns, show the exemption income, and keep your records and stay compliant. Finally, I want us to address the free trade zones. So, free trade zones now have incentives. So, we know the free trade zones. We have the one in Lekki, Lagos here, and the one in One, Port Harcourt, and several free trade zones that we have across Nigeria. And we know a lot of all these businesses, they registered as a free trade zone because back then they were trying to be tax exempt. So, they would go, oh, I'm operating within the free trade zone, so I'm tax exempt. But now, under the new tax act, entities operating within the free trade zone they continue to enjoy their tax incentives. So this includes free exemptions from CIT on qualifying activities. There's zero rated VAT on goods manufactured for export, exemptions from withholding tax on qualifying transactions, and duty-free importation on raw materials and equipment. However, these incentives do not come without compliance obligations. So an FTZ company, that's a free trade zone company, must be registered with the Nigerian Exports and Processing Zone Authority. They must submit annual returns to the zone authority, and then they shouldn't create a separate book of accounts from what they are giving to the zone of authority. Then they should so if they are having any business activities outside of the zone, how do I mean? You might have registered a business location within the zone. There's a free trade zone in this instance, and then you're having another factory operation outside of the free trade zone. Under this new tax act, you have to separate your zone operations from the operations outside of the free trade zone, because they don't want you to commingle your business activities and use the fact that you're operating in the free trade zone to hide certain expenses, to hide certain income, and get certain tax exemptions that only apply if you're operating within the free trade zone. Then you should now properly document all your claims for tax exemptions. So there are market discussions about a possible phasing on corporate taxes for free trade zone entities from 2025. While this is not yet officially documented, there's still ongoing stakeholder conversations around it. So, as finance professionals, I would strongly advise that you keep your ear to the ground and see how it will affect you. So now I would also make some additional points, saying one, withholding tax and TIN and TIN. So if you make a payment to a supplier, for instance, contractor or a service provider who does not have a valid TIN, that withholding tax rate, you are required to deduct it on the non-passive income. So you would now be paying more if you are making a payment to someone who didn't provide you with TIN or WHT. For instance, if the applicable tax rate would have been 5%, if the person are giving you 18, you now have to deduct 10%. If the person are giving you 18, if you would have applied 10%, you now have to deduct 20%, right? And so this is just to encourage the service provider or the vendor, the supplier, or the contractor to go and comply and get a team, and also communicate that thing to their vendors. And ideally, things should also be included in your invoicing. And the failure to do this correctly is a compliance failure on the company, and the company would now be the one to bear the brunt. So the action point is clear: before you process any significant payment, verify that the recipient has a valid SIN, update your vendor onboarding processes immediately to secure your business and protect them with tax compliance, as opposed to being in the coffers for tax evasion. Right. The small business exemptions helps here. So transactions of 2 million naira or below are exempted from withholding tax altogether for small companies, right? But above that threshold, the team verification is a non-negotiable. So withholding tax remittance to the NRS, as we all know, just a reminder on our deadlines, is due on the 21st of every month. The payee remittance to the State Revenue Service is due on the 10th of the following month, and VAT and is also due, returns and remittance also due on the 21st of every month. So, as a finance person, please mark this days down in your calendar to ensure compliance. So, let me summarize all these points I've spoken about today by saying: one, your small company status determines your entire tax position. So, you should know your numbers, you should know your revenue, and you should know your total assets. So, whether you should be in the medium, small, or large tax office now will determine your revenue and total assets will determine that. Two, your minimum tax has now been abolished, but it has not been abolished, rather, it has not been reformed. So you understand how it applies to your business that you run and that you maintain. Next is your capital gains. Capital gains is now taxed at 30% for companies, and you review any planned asset disposal before executing them. Number four, verify your TIN for every vendor before payment. And that is a cost. The cost of non-compliance is more expensive, so it's better to drive for compliance and save yourself the money and the hassle. Five is 5 year returns. Even when you own nothing, compliance is not optional any longer. Filing deadlines must be maintained. And also, I'd like to say something that I discourage the world of refiling zero. And we know with e-invoicing and e-tax that is coming up now, all those the world of filing zero and trying to say new returns, you should try to discourage these things going forward, because at the end of the day there's really no place where we can hide again. The tax bracket and the tax man's reach has become large, so the companies will be in the best position going forward. I'm sorry, the Nigerian Tax Act 2025 represents a genuine structural shift in the Nigerian tax environment. The government is serious about compliance, and the tools to enforce it are getting sharper with things like your e-invoicing, your e-invoicing, your BVN and NIN tracking and linking system, and even the tax promax is also changing in the ground as well. The NRS is working to change tax promax and build a more robust and digital system for tracking. So you now have real-time reporting and a new constituted NRS mandates for revenue. And I know some of us that on this in this network that deal with tax offices will tell you that most times when you visit any tax office, they're always talking about revenue target, revenue target, revenue target. And that revenue target is given to them by the Federal Republic of Government of Nigeria to try to drive collection. And how will they drive their collection is from businesses that we run, businesses that we maintain, businesses that we supervise as finance executives. So companies will be in the best position going forward to treat tax not as a nice to have, but as a necessity. So you have to treat tax not as a year-end problem. It's an ongoing, conscious, monthly effort by the finance team, by the business executive to handle it. So with that, I don't know if I still have more time to go into personal income tax at Caleb, or my time is up.
Yeah, thank you so much, Madam Adorinke. Yes, you can go ahead. And just a moment, please, if you have your question to ask concerning tax, as you can see, I've been enjoying all what she's saying. She's been talking and demystifying tax in the most gracious, seamless, and professional manner. So if you have a question, so as not to interrupt our flow, just put it in the chat box. Then when she's done, we'll have opportunity to have the questions, and you can also ask through a voice call. You can go ahead, Ma.
All right, thank you so much, Caleb. So now regarding PIT, we all know about the PIT, which is basically personal income tax, right? And pay. So the NTA 2025 made certain changes. We all heard it. No more CRA. It's now rent relief. Um, People that are earning below minimum wage. What's the implication for them? Nigerian Tax Act. We all heard the gist right there in social media, right? So yes, CRA was removed and it was replaced with 800 tax threshold. And I always like to point out that 800 is accessible profit, not gross income. So most times people go, I'm below minimum wage, I'm not CIT covered. Yes, you're below minimum wage, you're not PIT covered rather. But what we also have is we are talking about your accessible profit. So, and I tried to walk it back the other day to say anybody earning below 1.2, roughly, I estimated anybody earning below 1.2 gross per annum will likely be in this PIT exemption frame. Because if you do your gross salary of 1.2, which is about 100,000 per month. You would also have your rent relief applied as an allowable profit, rent relief applied as an allowable deduction. Then, if pensions are applicable and all that, the person might then eventually fall within the threshold of 800,000 as a free tax-free threshold, meaning the person will not pay any taxes to the federal government of Nigeria. So the payee, as we know it, remains the primary mechanism for collecting personal income tax from employees, but within enhanced requirements. So remittance deadline, as we had it before, it was 10th of the following month, it's still 10th of this month. Annual filing, still same thing, due by the 31st of January of every subsequent month. Then your late remittance penalty, we now have it as 2 million plus 10% per annum, which is applicable to the company. Then we now have electronic filing is now mandatory. So every employer is required to update their payroll information, ensure that all employees have a valid TIN, implement electronic filing and payment mechanisms. They're supposed to train their payroll and HR staff on the new procedures, review employment contracts and benefit structure, establish communication paid for employees, and document all tax related processes for audit trail. So critical employer actions, this is retrospective, but by December 2025, every employer should have updated their complete payroll system upgrade. We should have also conducted staff trainings and staff discussions so that staff will know their expected pay. Then by January 2026, which we are already in, right, implement the new applicable payee rates. So, and going forward, the NRS would be is mandated to review and ensure compliance. Then we now have the new fixed band progressive tax structure. So you know your first 800 of your taxable income, which is your accessible income as an individual, is tax free. The next 2.2 is at 15%. The next 9 million is at 18%, next 30 million at 21%, next 25 million at 23%, and above 50 million is at 25%. So employee earning 5 million gross annually, for example, after deductions, that's your pension, which is 8%, and NHF at 2.5%, your taxable income now becomes 4.475, right? But your first 800 of your taxable income is at 0%. Your next 3.3, your next 2.2 is at 15%, and then your next 1.475 million will be at 18%. So however, the total annual tax payment of 595,000 naira. Then to now talk about the reliefs and allowable deductions on that payee, we have pension tax contributions. That's the employee contribution, which is a minimum of 8%. Where applicable is now a tax deductible. Then your NHF 2.5% contribution is also a tax deductible. And by tax deductible, I mean an allowed tax relief to be able to reduce your tax exposure. Then you also have health insurance. Your health insurance contributions is now contributions to approved health schemes are deductible as well. Life insurance premium will be deductible for yourself and your spouse as a tax deductible. Rent relief is limited to 20% of an annual rent with a maximum of 500,000. And for this, I always like to point out that 500,000 max, you can, the only way someone can access 500,000 as rent relief is if their annual rent is above 2.5 million. So what does that mean? And I'll try to explain it, that if your maximum allowable relief is 500,000 and your annual rent is 20% of your allowable rent relief is limited to 20%, right? If you do 500,000 divided by 0.2, that's how I got my 2.5. So if you are paying below 2.5 right now million per annum as rent, what you should be applying as a rent relief is 20% of that. And even if you are paying above 2.5, the maximum you can allow for your rent relief is 500,000. The additional pension contributions beyond the mandatory 8% is also an allowable relief. Then interest on owner-occupied mortgages is a allowable relief. So what's your responsibility as an employee if you're on this call? Ensure you have a valid team. keep your records for all deductible expenses. Then you submit documentary evidence to your employer so that the employer will have it for their records. Then you review your pay slip monthly to verify that the correct tax deductions have been made. Then file your annual returns when that comes open, and understand how your take home pay may change, increase or decrease. And another thing I like to point out is, see, this at the end of the day, right, while your employer might have done their own calculations on how your net relief and taxable income is, go into being filing for yourself online at the end of the year, which is on or before the 31st of the subsequent year, which I'm talking about 2027, right? It's still on you to make sure that you had filed the right thing, and which is why we'll now be talking about getting a bookkeeper, and also as a bookkeeper reviewing your client's record. I was still helping someone to file their taxes the other day, and I said I needed to see their bank statement to be able to access what their taxable income should have been and what they should have filed. Right. Now, an employer, what are the employer's obligations? Under the new Tax Act 2025 and payee, personal income tax or payee, the employer's obligations involve one, payee administration, monthly withholding remittance deadlines, and the new rate structure, compliance obligations, which is registration, filing, and record keeping, and then penalties and enforcement. So, the FIRS, we no longer have FIRS or NRS, right? So for the allowable deductions, I mean for the payee remittances, you have to do that on or before the 10th of every month. So your state revenue services. Then for your federal, I know by next year, before we do January 31, they would have my expectation is that they would have gotten their acts right, and we'll know whether we'll be filing our payee as a company. I'm talking now as companies filing for their staff, or that's the company's assessment on pay, whether they'll be filing it to the LRS, to the state revenue services, or to the federal revenue service. We would know by January 31. Um, then so PIT is only applicable to people who have what's called residents in Nigeria, people who have significant economic interest and got businesses and got revenue within the shores of Nigeria. So if you spent less than 183 days in Nigeria, and even though you got income in Nigeria, you might be exempt from PIT. Needless to say that it's not just your tenure that determines, if your length of stay that determines if you're allowed PIT. There's also questions on the significant economic influence. So if do you have key relatives living in Nigeria? Do you have investments and properties in Nigeria? And such would we consider to determine whether you're a resident or not a resident of Nigeria. So residency rule applies for PIT. If you're a non-resident in Nigeria, you don't get to pay PIT. I think I'd like to stop here now. And if you have any questions, please feel free to ask. Thank you.
Thank you so much. Thank you so much for giving us of your expertise, of your experience, of your knowledge, of your exposure. We really appreciate it. So at this time, we'd like to invite members to ask questions. If you have questions, in fact, she has simplified the new tax act. In fact, I was just thinking, I was listening, I said, thank God this session is recorded. So it's something, if you have been having difficulty understanding the tax law, this is the most seamless explanation of the tax law. Just within 1 hour, she'll be able to run through the new tax laws. So our duty is to follow this video when it drops on the platform, on the YouTube platform. Just follow it through, listen to it time and time again, and you will understand. She made it so easy. Even though there's a lot of on controversy and uncertainty that are being spread around social media, But with the explanation now, even we as accountants, we can get clear insight about the tax laws. And personally, I really found a lot of value in what she has given to us this evening. So if you have a question, please go ahead. I know there's been some questions on the group. It's time to ask Madam Aderonke all those questions we post on the group, asking about the VAT and all of that. So it's time to ask the question now why Madam Aderonke is on the call.
Yeah, good evening.
Good
Yes,
evening. Go ahead.
yeah, so Madam Aderonke, yeah, thank you. You have really done justice to uh, the task compliance. I really appreciate your presentation. It's only that your presentation did not show it while presenting your the topic. However, I just want to know, uh, based on the maximum revenue and asset when we are relating it to small, medium, and large companies. Can you please identify it again so that I can get what I really ask for? In relationship to their business type, is it like a business name or limited liability? That's what I mean by business type.
Okay. Good evening, sir. So if I got your question correctly, that what is the revenue threshold that is used to classify a business as small? Is that the question?
Exactly. Maximum revenue, yes, to classify business in time of small, medium, and large. And in relationship to the business type, is that small business or what's it called, business name or limited liability?
So I mentioned something I call two-factor authentication. One,
Okay.
your total revenue must be below 100 million. Then two, your total assets must be below 250 million. So it's not a case of either or, both must occur for you to qualify as a small business. And you might not be wondering that if I've been operating my business for a while, how do I get the value of my total assets? Simply get a valuer to review the simply get a valuer to review the what's it called now, to review the value of the assets, the net realizable value of those assets as at today. That will establish the value of your assets on whether you qualify as a small business or not. So if your total revenue is in excess of 100 million, and if your total assets as at today is valued above 250 million, you're not a small business any longer. You're now a big business, a large business.
Okay. Okay.
All right. Thank you so much. Mr. Olaliko, would you still want to ask further question?
No, 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 no.
Okay. I'd like to quickly call on Mr. Augustine Nkili. Please, Mr. Augustine, unmute and ask your question.
Okay, good evening, everyone, and thanks so much, madam, for this wonderful presentation. My
Thank you, sir.
question borders on small businesses and VAT filing because the issue we have these days is NSR members, staff members insisting that one will have to pay VAT. But looking at the past history or uh, transactions of such companies, which makes them fall under small businesses, one would strongly ascertain that by year end, that company will not be able to pull a turnover of 100 million. So, how do we handle such?
Okay, sir. So if the one can ascertain and defend, that's why we have dispute and resolution systems within the NTA. If one can establish that, see this business first, it goes beyond the revenue. Remember, I said that it also goes to the assets. If the business is at today, let's give a rough figure and just say the business is at today, their total asset is valued at maybe 20 million. Let's just be conservative and say 20 million. Or even let's be extreme and say 150 million. That argument can already be had with the tax authority to say my total asset as at today is 150 million. I don't expect that my revenue by 31st December would exceed the 100 million threshold. So there is that exemption for me to apply for and to treat myself as a small business. So it's based on available data, which is what I was saying, that it's our responsibility as finance executives and finance professionals to keep the data of the business. So if there is data to back up that claim, I mean, that conversation to be had can be had to say this I am a small business, it applies to me, I should be exempted from anything that has to do with paying DAT as a small business, but the letters of the law. Because at the end of the day, while the tax officials may have a drive for revenue collection, right? There's also a drive for compliance from them. So they would also not want to be caught one thing and appear to be flaunting the laws and to be applying some form of undue influence or undue advantage on taxpayers. So that if there is data to back up this thing, at the end of the day, documentation, as I always say, is what will be used as evidence for why a tax position is taken, if either in favor of the taxpayer or otherwise, right? So once there is documentation to back it up, and it's a reasonable explanation, not something, for instance, if as I mentioned earlier, if your total asset as at today is already in excess of 250 million, there's already that likelihood that if you make certain business decisions and you're prudent with your business runnings, you might exceed that 100 million threshold. But if there's already indication, you can have that argument that as at today, look at me, my total assets is up to 250 million, and possibly historical data as well. You could present historical data to back up that historically this business has not made 100 million in revenue annual turnover. So, or businesses in our peers or on our stage of growth have not made 250, 100 million. So there's several things that can be used as an avenue for tax savings. But at the end of the day, it's interpretation and documentation of the law. If you have that to back you up, you'll be good as a business owner to say this is my decision to maintain that I'm a small business and I'm not a large business. Yeah.
All right. I hope that explanation answers your question, Mr. Augustine. All right. So now we would like to call on Mr. Mukaila Nero Ugumodade. Please, Mr. Mukaila, you can unmute your mic and ask your question. Okay. Okay. Lower this hand, I assume. Now, the last question is on the chat is asked by Basirat Ushudi. So she said, for withholding tax, how do company effect it on expense carried out by staff on the field? That's the first question. The second question is for capital gains tax. I heard you said it's now incorporated into the CIT, hence it has 30%. But I read where it says when it is reinvested into the same class of asset, it is not applicable. Is this not applicable to company? She asked.
Sorry, please, can you take the last part again? Is this not applicable to what?
Is this not applicable to company? That's what she
Yes,
asked.
and I
Just a
mentioned it.
moment. Just a moment. Rashidat Bashirat, if you're on the call, please you can ask it in person. Is Bashirat on the call? Okay, maybe she's not disposed to speaking, but she posted it in the chat.
Yes, and I actually mentioned it during the call that if your capital gains is reinvested in the business, you're actually exempt from capital gains. I mentioned it during my session. Now, to answer the first question on how will a business account for WHT by expenses incurred by company staff that are going to be claimed as reimbursable, I would like to paint a practical scenario for that. So when your staff made those WHT payments, my first question would be, did they pay the net after WHT or they pay the gross after WHT? So it now lies on, and in this scenario, I would like to go with the latter, where the staff. Bashira has a hand up again.
Okay, Basira. Okay,
Basira
go ahead.
said we
Okay,
can even.
okay, go ahead. Go ahead. So we can hear from you. Can hear the question
Okay,
live from
okay,
you. Go ahead.
okay. Good evening. Thank you so much for your lecture. So what I am trying to ask, I must have missed where you said if it is turned into the same class of assets, it will not apply. So I must have missed that. I thought it only applies to individual and not company. That's why I'm trying to get clarification. So for the first one,
Mm.
um for a particular project, maybe a staff member is sent to the field and they need to book hotel, they need to do transport, need to pay some people like that. How they are being given cash advance to run these errands, and they come back with receipts and whatnot. But the individuals they are paying to, say transport, say hotel, say they are paying to as an individual person, they are not allowing them deduct withholding before paying them. So that's what I'm trying to say, that how do we, they just come back with remittance and report of receipt and whatnot of what they have expended money on, but they are unable to deduct withholding. That's what I am trying to. So how does this affect the company? I don't know if
Hmm.
that is clear.
It is clear. It is clear, and the response I'm about to give, Basira. So first, for the comment you raised on the CIT, I've added my notes to the chat. So on the capital gains, rather, I meant CIT. What I said was there are exemptions. So for the first, is the company dealing in shares. If the disposal of proceeds are below 150 million and the chargeable gain is 10 million or less within any 12-month period, the gain is exempt. Also, if the proceeds on the shares of Nigerian companies, if the proceeds are reinvested to shares of Nigerian companies within the same year, no CGT applies, right? So that was what I mentioned during the call. Now back to this scenario where staff have incurred WHT or unnecessarily paid WHT to the vendor. The truth of the matter is the practical application was either that company. And what I mean, that's the company that the staff represents and the company that the staff executed the action on behalf of the company, that company will need to pay WHC again. And let me clarify why that would happen. Because one, how do you claim the withholding tax? You need your withholding tax credit note. How do you get your withholding tax credit note? You need the taxpayer's tin. So if you're not telling me in this scenario that you've given that the staff does not have the tin of that vendor, you cannot even make a case with the tax office to say, oh, I made the VAT, and we all know that VAT deduction is the responsibility of the taxpayer, right? But we cannot even make a case that, oh, by the way, I made a VAT payment already to the vendor, and then the vendor should remit and then give me my tax credit notes, right? So we already know that VAT collection and remittance is the responsibility of the service receiver, not the service provider or the contractor in this case. So, and there are penalties for it. So the practical answer is that the business will be ready to pay VAT or WHC twice on that transaction. Another alternative to that, and I'd like to assume that these reimbursable expenses, the examples you were giving, hotel and such, are not significant expenses. Another alternative to that is they can be passed off as over-the-counter transactions and as a reimbursable to staff. So that can be explained off as a one-off transaction. But let me pen a scenario. If it's a possible maybe a travel agency company where your staffs are frequent flyers and there are hotels that you use often, the expectation as a finance executive is that you would take the initiative because, as you've said in this scenario, there is a clear gap or breakdown in the interpretation of the law, and there's every likelihood that the business will pay double VAT, double tax, double WHT on this matter. You know, you can take that initiative to say, business, we need to make some form of process improvement and you know, cost savings for ourselves. And what that would mean is that we will also need to register, we have a pre-approved list of hotels that we can deal with and such, because at the end of the day, if you don't do it, the implications get WHC. If you cannot prove that and that's why I'm being careful here. If you cannot prove that persistently there is a track record of over-the-counter transaction, let me even go something as simple as HMO, for instance. You cannot tell me that an HMO is a reimbursable expense, or I mean a healthcare that your staff incurred is a reimbursable expense. The ideal expectation is that a business would have an HMO plan for its staff, and then they would, apply it for PIT or anything like that. So you just for finance people to be on the lookout for how practical and how reasonable this claim of VAT or WHT payments being done on reimbursable expense is. I always like to play devil's advocate, because if reasonability cannot be proven beyond a reasonable doubt, guess who would incur the cost? The company. Guess who would be adjudged as incompetent and allowed the company to pay double money? The finance executive in charge of the running of the business. So as the finance executive, the responsibility for compliance and for tax savings lies on you. So if after a time you see that reasonably it appears as though this business might have a challenge with proving WHT or reimbursable expense, we review it. And also remember that on the other end, that's the recipients as well. It is just not ideal for them to be collecting gross amounts inclusive of WHT and VAT on qualifying transactions. So you might also want to consider that you give your employees a pre-approved list of vendors, as I mentioned, and that those are the people they should be dealing with, because those would comply with the law, possibly give you their TN, and then you remit the WHT and give them you no longer need to give people credit notes now. Once you pay, they can log into your tax promax and it will show on their tax promax as a withholding tax credit on their account. So yeah, I hope that answers your question, Bashira. Madam Basirat.
Thank
Madam Basirat,
you so
okay, oh, good.
much. Thank you, ma'am.
Okay,
Let
I
me
saw
not take much of
you,
your time.
okay,
Yeah, I don't want to take much of our time, but then.
You can
okay,
always reach out to me. My number is on the group. You can always reach
yeah,
out to me privately and we'll talk further.
Okay.
thank you for
Thank you
that
so much
access.
for that. God bless.
Thank you. All right, thank you so much, Madam Aderonke. Thank you so much for just being, I don't know what to say, just being an excellent person, just being gracious, and just being, you are an active professional, still coming down to, explain to professionals that are just rising and climbing the ladder. That's very commendable. Thank you so much. You can't stop thanking you for this and for responding to our call at at almost I would just say that, oh, you didn't give me stress. Accessing you was so seamless. It just the way you speak is the way access to you is, and I'm not surprised by when you told them Basirat to also reach out to you for that explanation. Always ready to help and to lift over the others. God bless you and God increase you in all ramification. So lastly, I saw in the chat and Ganiyu Olanrewaju requested a slide. It was also in my thoughts. So you said
I
earlier
will
that you
send Caleb, please check with me later in the day. I actually need to go now. I have a meeting by 7,
okay,
but I'll send it to
okay.
you.
All right. Thank you so much. Thank you so much. We appreciate you. Goodbye for now.
Thank
Thank
you
you.
so much,
Oh,
everybody. Bye.
all right. Okay. So thank you everyone for being on the call for this long. We are almost 30 minutes beyond our time, and we sincerely apologize, but it was worth it because Madam Aderonke was full of value, and we didn't want to interrupt the flow of delivery. Okay, now, so I believe all the questions have been asked, so every other thing will be posted on the group, and moving forward, there are other things that will come up, as I said earlier, that we're going to be executing in the course of time. Thank you so much for joining the call. Do have a restful Sunday and do have a great week. Thank you, and God bless you.